What's up everyone? It's Blandon here from iRefi Mortgages. Today I want to share with you how you can buy an investment property using 100% equity from your existing property. So first of all, what is that word equity? Equity is the amount that you own on your property. So for example, you have $1 million property and you have $500,000 mortgage. Effectively, you own half the property. So you have 500K equity in that property. The second thing that you need to understand is LVR. So LVR stands for loan to value ratio. And that's a rule that the Reserve Bank have set on what's the maximum you can borrow on the different types of property, for different purposes. So for example, if you're gonna live in the property, we call this an owner occupied. In that situation, you can borrow up to 80%. So effectively, if you want to buy $1 million property, you can put down 200K as a deposit. Now, if you're buying an investment property, you need to put down 35%, and the Reserve Bank will allow you to borrow up to 65%. Effectively, you need 350K for that same $1 million property. Now the third the third situation where you need to think about is where there are exemptions. So if you're a first-time buyer, in some situation you'll be able to borrow up to 90%, and if you're building a new property, potentially you can borrow up to 95%. And if you're buying a new build, basically the government wants to encourage people to build more houses because at the moment there's a slight shortage on supply. So with investment property, if you're buying a new build, you can borrow up to 80%, and that's what we call an LVR exemption. So how to use the equity in the property. So let's pretend you've got this property that you've owned for a few years. The value has gone up significantly. This is most parents' situations where mum and dad sort of own that property. They pay down the mortgage and maybe they have 450K left on that. So effectively they have 550K equity, but we can't use all of that as a deposit. The maximum we can go for is up to 80% of the value of this property. So effectively, the value of your property times 80%. Effectively, you can borrow up to 800K. So this is the maximum that we can borrow. And we've already got existing lending of 450. So what we need to do is we need to use the 800,000 and take away the existing lending first, which is 450K. So what does that leave us? That will leave us exactly 350K that we can use as equity. So this is mortgage, and this will be cash. This cash now, this 350K, you can now then take it and put it down as a deposit on a second property. Now effectively, this is borrowed money on your property. You have not put down any cash at all. You put down a 350K deposit, and because you've got surplus income, you've got good cash flows, plus you're getting the rental income from the second property, the bank is going to allow you to borrow up to 65%, which is 650K. So now you effectively bought another $1 million property with no money down, using 100% equity. This is, of course, it has to look at your servicing capacity as well. We've got another video talking about servicing capacity and how the bank actually calculate how much you can borrow. So equity is one side. The second thing that you need to meet, the criteria that you need to meet, is servicing capacity. And in this scenario, if you're buying a new build, obviously you've got a lot more room to buy a larger property. And yeah, look, what I've done is actually put together a spreadsheet for you guys, where you can plug in a couple of numbers on how much your current property is worth, how much your investment property is worth, and it will calculate how much of this equity you can top up on, and secondly, how much you can buy as an existing property. So just download it down below. And I've also linked the servicing video down below. As well, on top of that, we've got some case studies on how people are paying down their mortgage 10 to 20 years sooner. And that's a very good case study for you guys to check out as well. Thank you for listening. I'll catch up with you guys next week.